Who could imagine this year having the discussions we've been debating through panels and in between ourselves in terms of where the world's at today versus where it was last year. A very different operating environment. We've moved from a glass half full to almost a glass half empty view of the world, and over the last 3 or 4 months over summer there's been a number of global issues which have really caused people to really wait and just think about where the world is really heading. Obviously you've got the US credit ceiling, the downgrading of the treasuries here. That was a very significant event. And then we've had a very turbulent time in Europe with Greece, and even though it's encouraging overnight to see the bailout package they've organised, the execution will be absolutely important. And similarly, I think, you know, from a real estate perspective, the talks and the debates have all been about, well, what does it mean for real estate? What does it mean for investing, both here in America and overseas? And the key themes that I've learnt from listening and participating in these panels is that patience is key. There's no need to rush. There certainly is a lot of pressure out there in the markets. And I suppose, you know, when you consider jobs and housing, public services, education, healthcare, there's really lots of big issues out there that, you know, there's going to be no magic bullet. There's no quick fixes. It's going to be a hard, long grind to work through these issues in predominantly the mature economies, in Europe, UK, North America. And even though the emerging markets like Latin America and Asia look quite robust, it's a very connected world, and therefore we're going to see some softening around those regions. And, you know, we're seeing that ourselves, and that's certainly what we're hearing on the panel. So it's going to be very interesting when we're here next year just to see whether the world's sorted itself out or whether we've got ourselves into a situation where it's going to be very difficult to move forward confidently. And we should be able to tell that by looking at a few things: capital raising and looking at the occupancy markets, seeing whether there's true new take-up and therefore whether jobs has really started to take on.